My name is Ross Mandell. I'm coming to you from Delray Beach, Florida, Scott Willey Studios, and I'm going to dial the clock back. I was a young Wall Street stockbroker, 1985, working at Oppenheimer and Company. Started in 1983 with E.F. Hutton. I'm in the business now a little more than 2 years. I've got close to 300 accounts on what they call my money line. This is before everything was digital, before cellular, before Google, before really computers. And we would get printouts every day of the listing of the name of your accounts and what they had in equity, what they had in debt, what kind of money, cash reserves they had, etc., and their positions. And I would basically pick a stock or an idea and I'd pitch it. And I would open accounts, and then I go back to guys and I try to develop those accounts based on what the client needed, what his parameters were, his investment objectives, etc. But I was decided I was going to be a stock guy. I stopped doing business with people that wanted me to tend to their IRAs or their Keogh plans and all that kind of stuff. I left it all behind. Like they said in the first Wall Street movie with Charlie Sheen and Michael Douglas, I was into big ticket retail. And the way to do that was to focus my expertise on equity or the stock markets. And so by this time, I had a nice little business, making somewhere around $30,000 a month, but I'm sort of stuck in that groove. I can get to $30,000. I can even get as high as close to $40,000, and that's a month. But I can't penetrate that $40,000, $50,000, $60,000 a month game, and it was really frustrating. The way to do it, generally speaking, is to find an idea, a security, and build a position. Build the position. You pitch it to every single client. You eat it, you sleep it, you digest it, and anyone you meet, anyone you know, you're telling this story. You know it backwards and forwards, inside and out, and you try and get as many shares as you can under your management. And then, of course, if it's a good idea and the market's cooperative and the story works, you can then go in, you can get out, flip it out, and now you have, potentially hundreds of thousands or millions of shares of something, or your clients own, you might own it as well, and you flip it out, and everybody's happy, everybody made money, and then you can move into another position or two or three positions. And so I decided I had gotten a tip. I got a tip on a company called Pan Am World Airways. We all know that story. Pan American was the first international carrier, the first company where you can actually go to the airport and fly over the ocean. You can go to Europe, you can go to Asia, you can go to Australia, you can go to Africa. I mean, this was a huge, huge deal. A lot of you kids don't understand. This didn't always exist. A very good associate and partner of mine, Greg Shaw-Haskin, he's going with his group of guys to Dubai to play in the Rugby 7 tournament. They throw a big tournament. He's got to fly from Florida to San Francisco. From San Francisco, he flies 12 hours to the Middle East, like Doha. Then he's got to switch planes and take another 3-hour plane and all these different things to go to the other side of the world. This didn't always exist. So I started accumulating shares of Pan Am International Airways. We all know Pan Am, the name. And I was determined to own millions of shares, be a player in the stock, and then when it worked, because I got a tip that they were going to sell the company, and there was a lot of chatter about it over the years, that some of the newer, more well-funded airlines that were constructed without these legacy issues from the initial days of aircraft and aircraft carriers, you had a chance to acquire Pan Am. And they had all these routes. You see, they established these routes all around the world. The FAA, the Federal Aviation Commission, grants airlines an opportunity to have certain routes around the world. It's not easy to break into that world. And Pan Am, of course, was the first. They had all these valuable routes. And so I was told that the stock could go to $15, $20 a share. The stock was trading right around $5, a great price to retail out shares. So I'd get on the phone, Mr. Jones, Mrs. Jones. I would be calling. I got everybody to buy 1,000 shares, 5,000 shares, 10,000 shares, 20,000 shares, and then I would go back to them. It's a big market of stocks. Back in those days, there were tens of thousands of stocks, okay? And I went back to them. I said, I know you like this. I know we're looking at that, but I want you to own even more Pan Am. So people that had an appetite to buy 1,000 shares of something, collect a bunch, diversify, and move on, which is really wisdom when it comes to money management. I said no. I said, you with me? Here's what I want to do. You only own 1,000 shares of PANAM. I want you to own 5,000 shares. Or a guy that had bought 10,000 shares, he put 50 grand into an investment opportunity. I got him to buy 50,000 shares or 20,000 shares. And then once I got everybody involved and the stock starts to cooperate, I had people buy it on leverage. This is called margin. So if you have a quality security, the brokerage firms will offer up a chance to buy it on what they call margin, which is basically financing a stock position or a bond position. It's very common. It's not, an uncommon type thing or out of the ordinary. When you buy a house, very few people just pay cash, right? Oftentimes we get a mortgage of some sort. We put down 10%, 20%, 30%, whatever the numbers are. Some people are cash buyers, and there's nothing wrong with that. But, really it's not a great investment to tie up your money into a house for all those years just with the hope that it's going to appreciate and you're going to make back some money. There are better ways to utilize your capital day to day and really grow that money in a much quicker way than you will in a piece of land, a piece of dirt, and a house. But so I started to acquire Pan Am, and I had good information. It was very, very exciting. And it's sort of like the Charlie Sheen movie Wall Street. Michael Douglas, his dad worked for an airline company, and he would get all these inside tips, and that's how they get busted. And at the end, they go to jail, and he rats out Michael Douglas, Gordon Gekko. I'm acquiring stock. I stopped buying at 5, and within literally the first few days of me buying it, it pops to 550, 575. So when you have an investment and you're up 10, 15% in a week or 2 weeks, a lot of people are like, wow, the banks are paying right now about 3% if you put your money in for a year. That's what banks pay you because they take that money and then they go buy Pan Am with your money. And they pay you 3% and they make 10, 15%. And that's banking. They basically use your money to make themselves money. And there's all kinds of leverage that's involved when you have that banking license. I know because I had it. You're really getting 33 times capital, meaning if you put $1 million in the bank, whatever you do, deposit it, you do CDs, whatever even if you buy T-bills, whatever the investment is, once your money is in that bank, it becomes their money, technically speaking, and then they get roughly 33 to 1 use of your money. So $1 million in the bank has to invest roughly $33 million with your money, and they get to try and make more money. So within a week, I'm accumulating this stock, but I'm not the only guy. The word is out a little bit. It's a very marketable security. I call you up. I got a great pitch. I'm a good salesman, and I'm saying, you can own this stock at $5, $5.50. It's not like I'm pitching you NVIDIA at $180 a share, okay? Or Netflix, which was $1,100 a share. They split 10 for 1, and the market's been down 1,000 points in the last 2 days, and Netflix is up $2.50 because you can buy it at $100. Imagine buying a stock at $5, $5.50 a share. Before you know it, the story's out there a little bit because guys like me are aggressively pitching the story. It turns out the company was aggressively trying to sell itself. It goes to 5. It goes to 7. I'm like a friggin' hero, like a rock star, but I want more. That happens to be my drug of choice, just so you all know. And I keep pushing and pushing, and guys like, maybe we should sell it. We're up $2 on 5. Now, here's the magic of margin. If you buy a stock on margin at $5, you're putting up $2.50, and the firm is putting up $2.50. So you owe the firm technically $2.50. When the stock goes up $2, so now it's at 7, you still put up only $2.50. But now your equity, let's say 1,000 shares is $5,000. You put up $2,500. The bank puts up $2,500. The investment, the brokerage firm puts up $2,500. When it goes to 7, your investment is now worth $7,000, and you only owe $2,500. I mean, so you put up $250, $2,500. It's now worth $7,000. You're making some real money. you're making $2,000 on your $2,000, $2,500 out-of-pocket investment. Do you guys understand? Pan Am started to move. It's at $7. It's at $7.50. Now imagine a guy put in to buy a stock at $5. They put up half. They put up $250. The bank put up $250. When it hit $7.50, you put up $250. The bank put up $250. Now you're up $250. You're now up 100% on your money. And this all happened within a few short, like 6 weeks maybe, 7 weeks. And I'm flying because my information says this thing's going to go out somewhere between $15 and $20 a share. I own personally, and I'm buying it with my own money, and my family's invested. And I've got literally almost 300 individual accounts, clients, etc., buying Pan Am, and more than half of them are buying it on margin. Well, guess what? The stock stops trading. It's $9 a share, and I'm like, yes, I'm counting my money. I'm figuring, oh my God, I'll probably make somewhere in the vicinity of $2 million. It's 1985. I'm 28 years old, and I'm in the business 2 years, and it's my first real stock position. I got about 2.5 million shares under management, and I'm so friggin' psyched. And it stops trading at about $9, $9.25, like that. And I'm like, yes, I'm so excited. And it's in the Journal, and it's on TV that they're looking to sell the company, and it looks like there's a deal, and it stops trading because news pending. Well, let me just tell you, never count your chickens before they hatch. Never spend the money before it's a CIF, cash in fist. I learned that in this circumstance. I'm sharing with you guys the truth. Never told this story like this ever. Stock stops trading for more than 24 hours. And I'm like, boy, this is a big friggin' deal. I'm drinking, I'm smoking, I'm snorting, I'm running around with women. I'm a big player now. And remember, 1985. And then all of a sudden the stock opens. And the news starts coming out. They have to disseminate the news. They have to make sure that everything is organized because the geniuses, this is how corrupt American business can be, the stock market can be. They decided they weren't going to sell the whole company, but they were going to sell all their trans-Pacific routes, which was the value of the company. Okay? So the buyers that, I forget the terms now and I forget who bought it, but it was a major airline backed by all the big investment banks. They said, we're not going to buy the company because frankly the company's shit and the company's doomed, but we're going to pick out the best assets of the company. And this happens every day, guys, every day. And what happened is they took out all the trans-Pacific routes and a few of the hubs and a few different, all the guts of the company, the assets of the company that gave it value. And then they gave golden parachutes to all the big executives because the big executives realized they were screwing every shareholder, screwing them. And they knew it, and the buyer knew it, so they had to make sure they paid off the board members and all the executives, and they did just that. And they bought the big Pacific routes, the big asset, and the stock reopened. It was $9.50, $9.75 when it stopped trading, something like that. It should have reopened. It should have been a $15, $18 deal. Instead, they paid bupkis, pennies, and the big boys all got paid and bailed out, and the stock went straight on down to about $3 a share. And when that happened, not only did the stock go down, you lose all your equity, the bank said, all these people that borrowed money to buy this on margin now owe us money. I literally had to make 130 margin calls in 3, 4, 5 days. I was absolutely gutted and wasted, and I had to restart and rebuild my whole business pretty much from scratch. I also lost about $100,000 of my own money in this whole thing, and I was just, and this is a true Wall Street story. This shit happens every single day. I want you to understand. I'm sharing with you this from my heart, and all this is verifiable, etc. But everything is not always what it seems, and you got to watch out the other guy because greed can kill. It sure hurt me.